dim sum bonds or kangaroo assets? Well, this is a question that many Chinese investors are now asking themselves after the offshore market for renminbi-denominated bonds took off last year. Well, one company, Agincourt Capital, is now looking to offer the bonds to Chinese investors that will be convertible into Australian property assets.
We'll invest in office property and commercial property and residential property in Australia. Now, to fund this, we're offering a bond denominated in RMB, and then the security will be an underlying Australian property asset, and also it'll be convertible into the fund. So very simply, the fund will be the very first of its type in the world, offering a return of 4% plus the ability to convert into the fund, so the investor can earn between 10 and 22%.
But some analysts are saying that there could be a currency risk if they invest in your bond if the yuan gains versus the Australian dollar.
The yuan and the Australian dollar, if you look at them closely, have a very close correlation because of our close trading relationship. In fact, the Australian dollar has appreciated slightly against the yuan over the last year, but that may change in the year ahead. In actual fact, the investor who holds the bond has all the control because they can decide to stay in the yuan bond or to switch into the Australian fund, into the Australian currency. So there is some risk, but we think minimal.
Craig Turnbull from Agincourt Capital in Hong Kong. Let's now take a look at the markets and Asian stocks.